Hi everyone, welcome to today's trade of the day. And for today's trade of the day, I will be looking at the pound CAD. Why I'm choosing the pound CAD is because there will be key news for the pound and CAD coming up later on today. So what I want to start off with first is the daily chart. I see a very interesting configuration right here. Now it's interesting to note that I want to introduce this concept called the supply and demand candle concept. All right, some of you may know about it, but let me just share with you. So when we see a strong trend, right, it doesn't matter which direction. And in a strong trend, let's say now is an uptrend, there's a lot of green candles, there's one small red candle, and then there's a resumption of the trend. This small red candle is what I'll call the supply and demand candle. What this means is that in a strong uptrend, this is a level where buyers and sellers think it's a fair value and they start trading very actively for that candlestick session. And that means that that is a place where we can find strong support or resistance. All right, the same is true for a downtrend as well. So let's just say now over here we have a strong uptrend, right? There's one red candle in the middle of all these green candles. So let's use the red candle as our supply and demand candle. Okay, I draw a box around it. Now, it is interesting to note that when price actually broke out of this supply and demand area and came back down and tested it, price tapped into the zone and immediately rejected off, right? And we don't just use supply and demand alone. I see that price has made sort of a zigzag pattern down. So let's use Fibonacci extension as well. 0.1 to 0.2 to 0.3. And we see that price has tapped the 161.8% exactly right on that spot. So we can call this our daily support. Now, how far up can price go? Of course, I see a graphical resistance level over here. Okay, let me just call this the daily resistance. And I want to confirm that this graphical is in line with Fibonacci ratio to give a stronger probability that this level is the one that we are looking for. We take a retracement from this swing high to this swing low. We open all Fibonacci ratios. And we see that the graphical level resistance is in line with the 38. All right, so I've highlighted it there. Now that we have the daily support and daily resistance, let's go down to the 4 hours. Now, on the 4 hours, it's interesting to note that if we change to the line chart, we see that price has made some sort of a double bottom, right? A double bottom has to happen when there's a strong downwards trend, and then we see a double bottom. Price breaks above the neckline, and then it takes off. Okay, the same is true when price goes all the way up. Okay, we see price form a double top. It breaks below, and price will go all the way down. All right, so now we have the daily support, daily resistance, and what seems like a double bottom pattern. Okay, it's a bit hard to see on the 4 hours, this double bottom pattern. So for clarity's sake, we want to go down to the smaller time frame. So let me tidy up this chart, and then we can go down to the smaller time frame. Let's go down to the 1 hour. So now we are on the 1 hour. I can erase this supply and demand zone because I know where it came from already on the daily. And I just want to tidy up this one as well for all of you to see that it's not just the daily, but it's also the 161.8. And we have the daily target over there. So now we see that price actually formed the double bottom, right? And this is a strong downtrend. Okay, so we just want to connect the tops. All right, we just want to connect the tops, the highs, and we can see that price has actually broke above, right? Price has actually formed the double bottom, broke above, and is now coming down to retest the trend line before taking off. Okay, so we have price making a low here and then a recent swing high, so we can use Fibonacci extension. Let me just zoom in so it's easier to see. Okay, so Fibonacci extension from the low to the high, and we want to use the key Fibonacci level of 61.8, right? Because there's a higher chance that price will be attracted to that level there. So we can put our buy entry at the 61.8 level, which is in line with the trend line. Should price come back to retest, okay, let me just draw a dotted trend line, okay? And then we can use Fibonacci extension because then there is sort of a zigzag. We want to see how far price can go up. So let's use Fibonacci extension, draw that level in, and open up all Fibonacci ratios. Now, the next important level will be the 161.8, okay, because it's a key extension level. So let's just highlight the 161.8. All right, and this can be our partial take profit. Okay, I'll call this the take profit 1. I'll bracket it and put partial. What this means is I'll wait for price to come back down to the buy entry, but I don't immediately enter the market here. I need to wait for rejection. The moment there's a rejection, then I will be clear that this is really the level I want, right? So I'll have the buy entry here, and I'll play to the take profit, the partial take profit. Once price reaches there, I'll close out 50% of my position and let the remaining run to the daily resistance, right? So we have it over there. Let me just change this color to red because it's a resistance level. All right, and my daily support here will be the stop loss as well. Why this low is the stop loss is because if price breaks below, it will have gone below the trend line firstly, and secondly, it will have gone past the daily stop loss, the daily support, and it will resume its bearish trend. And then this will just be a fake out. All right, so it's a very simple trade of the day for today. We're just really being patient and waiting for this buy entry level for price to come back to this buy entry level. All right, so thanks for tuning in to today's quick, simple, and clean explanation of the pound cat. I wish all of you good health, and I'll catch you guys tomorrow. Thank you.